Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, October the 4th. The year's 2024. Let's talk trading. Weekly wrap-up, NFP Day. These videos are for educational purposes only. Your results may differ from mine. And just a reminder, risk management and NFP days is one of those days you definitely want to have your risk management in place, because you never want to lose more on any one single trade than you are willing to lose. So jumping in, looking at the weekly, all gaps are filled. You can see here, when we came down and took out the weekly pivot from 2 weeks ago, which was an open pivot, and as you can see, it is a huge drop. We're 275 pips below the weekly open. 332 off the weekly high and 22 off the weekly low. We take a quick look at the month. We're 275 pips below the monthly open, which shows you things are going to the south. 300 pips off the monthly high and 21 pips off the monthly low. And the daily, I know this shows some very interesting things, at least in my opinion. You can see here we broke out of the weekly opening range here on Tuesday. Then we to the downside. Then we broke out of the monthly opening range low yesterday. And we've continued south. But you can see here prices bouncing off, coming back into that lower wick zone. And for the year, only 382 above the yearly open now. Notice here, we haven't pushed the yearly range this month yet. And we're 340 pips off of that yearly high and 79 pips off the yearly. 795 pips off the yearly low. We had an inside bar 2 days ago. Yesterday we broke out of the downside, that inside bar. You can see on the month, we got a lot of inside bar action. On the daily, we actually broke 100 pips of range here, which used to be 150 used to be about the average back in the old days. But we have 105 today. Notice something here. The dollar yen is actually 1 pip ahead of the pound yen on the daily range. So big move on those yen pairs. And you can see here on the hourly, the buy zone, it just shot right through that daily open. And the weekly open's way up here. In fact, there was an indicator, I'd call it no man's land, when you trade between the weekly open and the daily open, because you really don't know which way to go. But with the weekly above the daily, signaling a downside move, that would have paid off nice. But you can see the pounds coming back, trying to reach the 131. And it might hit that level. Actually, it hit it in reverse so far. So green rats are trying to feast. You can see here there was 1, 2, 3, 4 times coming out of that rat zone. And you see here the smart rat got in about 4 pips earlier So there was 4 more pips to be made. And looking at the red rats, let's see, was there enough room there to feast? Yeah, it looks like there might have been enough room. A large enough range for the at that time. Bambino Flex indicators said to go short. Price at or near the pivot was a short, and you can see here what happened. Just taking that simple trading plan and following it would have paid off real nice today. Now, in this particular case here, when it was moving down, it was a green candle. You could have maybe put partial trade here, but when it went from green to red, you could have put more pips on there breaking out of that wick zone, and the rest would have been history. Of course, somebody will say, oh, that's hindsight, but that's the way you trade it. Okay, monthly pivot taken out, weekly pivot taken out, and daily pivot taken out. So we've still got a few hundred pips to go to take out the rest of the 2024 daily pivots. Ditto on the weekly. And we've taken out all the monthly pivots. In and out of that lower wick zone, and you can see here, out, trying to get back in here. So chances are, I think it's probably going to maybe resume the downside. But you have to trade what you see. For the week, look at that. 353 pips of range. That's a huge week. We failed to break out at a high, but we broke out at a low by 179 pips. Previous week's low. High minus close, 326. Close minus low, 28 for you rats. And for you weekly crossover traders, 56 high minus open for the upside, and 298 open minus low to the downside. Looking at the price action, simple price action chart here, it looks like that was kind of a no-brainer. And even here we had an outside bar. So if you were waiting for a signal coming out of that outside bar, it's a very nice signal. So it looks like the sellers pushed down once, pushed down twice. Buyers are pushing back up. We got to see who's going to win. Who's going to win the battle at 131. Now let's just take a quick look at something here. So for the last 12 weeks, no, here, just looking at the chart, this is the biggest one, this week's range. Looking at the 3-ball action here, we go back, you can see here, there was a signal way up here to take the short, and trading right here, you can see you had a lower high. It's good for a couple of pips. Now if you stuck with the trade, Now you see there would be pips to make right here. We just had a high or low break to the downside. Also a flip-flop box worth about 3 pips at the moment. So it's when you start to when you can start seeing those trades, even though you might say, well, that's hairy hindsight. You know, where were you 2 minutes ago? I was on another chart. But the thing is, we know what the play is. And so you take the play. I mean, you just had a 3-ball here. It pushed down. You had a flip-flop box. You have a, high or low. And it's just like, and that trade could have been good for what, 3-4 pips, maybe 5 down to here. So you just take what you can get quickly. Now, if you've already made your daily nut, then maybe you say, hey, maybe it'll pull back to the 50. And maybe you want to try for, to make more pips that way. But in the meantime, until you reach your daily goal, you just might, especially if you're trading on the 1 minute, you just grab those pips. Because if you look at the market structure people, they're not looking at the 1 minute chart. They're usually looking at the hourly or the 4-hour or the daily or the weekly. Actually, I haven't seen too many market structure people use the weekly, but anywhere from the 30 up to the H4 is usually what you see them looking at. Anything below that, they'll consider this noise, but we consider this opportunity. One trader's noise is another trader's opportunity. Maybe I should coin that. See, we've already seen, oh, I went the wrong way. We've already seen the rats, and once again, the rats had an opportunity to make some money. Weekly 1. Taking a look here, we had the statistics. Somebody wanted to know about those hours. What's the best one to trade? When we determined, I think it was between 15 and 19. Because you can see here, usually above that range, more times than not. And as I mentioned, we haven't pushed the range, and you can see here we've given back almost half of the profit from the end of September. We can look at the year-to-date accumulated once again. We haven't pushed it, as I just mentioned. Whoops. Okay. Edit. Range by month, 320. So we're nowhere near, well, we're not at the lowest. We're at the, let's see, 320 got 1, 2 months. That was less than that. A quick look at the ATR percentage. We're at 84, so that's not bad. Not bad at all so far, considering what? The first week, trading week in October. And see for the month, you can see here, seller strong control. On the weekly, seller strong control. And on the daily, seller strong control. Well, the fastest 15 minutes of trading's almost over. So everybody have a fun and safe weekend out there. And when you come back to your trading screen, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.